we are going back to a world where the U.S. dollar is not the center of the universe here, that everything revolves around us the way Trump believes it is. Get your gold and silver now while you can at Schiff Gold. You got to go to Schiff Gold. You got to buy yourself some gold and silver. And again, on the silver, buy it before we run out. The shortages are coming for silver. I mean, this is going to be the best January I think we've ever had, but I think 2026 is going to be the best year we've ever had, the last best year that we've ever had, which was last year. This is not the end of a trend. This is the beginning.
You're at roughly 100 million ounces in the last 45, 50 days that have been delivered. Now, is there any coincidence maybe that government classified silver a critical mineral and they just passed a law saying that the government will put price floors underneath critical minerals within the next 90 days?
The global economy is pivoting away from U.S. dollar hegemony, sparking a desperate race for tangible assets before inventory runs dry. Analysts warn that 2026 is shaping up to be the most explosive year on record for precious metals, driven by a perfect storm of monetary debasement and physical scarcity. Peter Schiff, chief economist, and Andy Schectman, president of Miles Franklin, emphasized that the window for accumulation is rapidly closing. Schiff argues that the dollar's decline is accelerating, making Schiff Gold and silver essential hedges before shortages make them unobtainable. Schectman adds a crucial catalyst. Over 100 million ounces of silver have been delivered in just 50 days, coinciding with the government's classification of it as a critical mineral. With new laws potentially establishing price floors within 90 days, the market is bracing for a government-mandated repricing. This legislative shift, combined with record physical offtake, signals that the current rally is just the beginning. Investors are urged to act before these price floors and shortages permanently alter the market landscape. Now, we present the clips from Peter Schiff and Andy Schectman's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
Gold is at a new, fresh, all-time high right now. It's trading above $4,925, up better than $94 so far today. Silver also right on the highs, up $3.18. We're at $96.16. Look, it's not going to be much longer where you could buy silver below $100. So, don't wait. And gold, it won't be below 5,000 for long. So you got to go to Schiff Gold. You got to buy yourself some gold and silver. And again, on the silver, buy it before we run out. I can see the shortages are coming for silver. There's just not going to be the product. There's just too big a demand. The demand for physical precious metals has been very muted over the last few years because people didn't realize what was going on. And in fact, a lot of people that might have bought gold or silver ended up buying Bitcoin. And I feel really bad for these Bitcoiners. Bitcoin is down again. Bitcoin is 89,500. It's not going anywhere. It's relatively flat on the year. Last year was my best year ever as an investor for my entire portfolio, right? And it was the best year that I had as a professional money manager for the entire portfolio, right? We killed it. We hit the ball out of the park, right? It was in a phenomenal year in 2025. And Bitcoin went down last year. This year is already off to a much better start. The returns that we're getting in January alone are incredible. And January isn't even over. And the people who are sitting in Bitcoin, not only did they miss out on all the gains from 2025, they're missing out on all these gains from 2026. And as big as the gains were last year, I actually think they're going to be bigger this year, as amazing as that is, because people think, how the hell could you beat last year? Because last year was so strong. Well, I think we're going to beat it. And of course, as far as the amount of money that customers will make who have these strategies, we're starting from a much bigger base. So even if the return percentage-wise isn't as big as last year, the dollar value of the gain will be bigger because we're starting from a bigger number. But I actually think the percentage gains can be bigger too. This is an explosive year, I think, and Bitcoin is just going sideways. And, even though it hasn't crashed yet, and I'm surprised that the bottom hasn't dropped out yet, but it will. But if you're sitting there in Bitcoin and you feel good because it hasn't crashed, the losses that you are experiencing right now is the opportunity cost. While you're sitting in your Bitcoin hoping that Bitcoin goes up, you're missing what actually is going up. You don't own any gold. You don't own any silver. And you don't own any mining stocks.
So far in January, which is not a delivery month, I don't know, somewhere around 40 million ounces has already been delivered. I haven't checked it, but I would assume that's about where it is. It was in the upper 20s last week. So even if you take the upper 20s and you add it to the 64, 5, 6 million ounces that was delivered in December, the largest ever, you're at roughly 100 million ounces in the last 45, 50 days that have been delivered. Now, is there any, I think, coincidence maybe that the government classified silver a critical mineral, and they just passed a law saying that the government will put price floors underneath critical minerals within the next 90 days? I think that there is this fine line between, could it be Samsung, Sony, could it be the government not telling us if it's done under the Exchange Stabilization Fund? They don't need to get congressional approval. They don't need to tell Congress up front because it's for national security. Well, silver has now been made a priority for national security. And so I guess all I'm trying to say is that it's incredibly unusual, and the people at that level who are bringing in that kind of money, who have been following what the central banks have been doing, in my mind, that's all you need to see. And you can see that this is not a mania. It's not a mania because even though we're doing tremendous volume in business, it's not the volume that we saw during Silver Squeeze, where everyone was buying little bits, even a couple $1,000s worth, where the public was starting to expand. Now, these are the people who we've worked with for a long time, or the people who have been watching you for a long time, or me or others, who are finally saying, it's time to actually do something meaningful here. And we're seeing much larger orders. Our average order size right now is exponentially larger than it's ever been. These are people who are concerned, who are aware, and are seeing the same things that we're talking about, but they represent a tiny portion of the public. The public is still vastly unaware of this, and that's due to the fact that how do you explain that we have gold and silver at all-time highs, and it's nowhere to be found on the mainstream media? It's not on 60 Minutes or on the cover of any newspaper.
While Bitcoin remains stagnant around $89,500, gold and silver are shattering records, with gold crossing $4,925 and silver poised to break $100. Market analysis suggests that crypto investors are suffering severe opportunity costs, missing out on what is shaping up to be the most explosive year for precious metals in history. Portfolios weighted toward physical metals and mining stocks are delivering exponential returns, far outpacing digital assets in 2026. More critically, a quiet accumulation is draining physical supply. Over 100 million ounces of silver have been delivered in just 50 days, coinciding with the government's classification of silver as a critical mineral. With new laws potentially establishing price floors within 90 days for national security reasons, smart money is placing historically significant orders. This divergence suggests the public is unaware that the window to acquire metal before a government-mandated repricing is rapidly closing. Let's get back to the interview.
They're one of the ones that are short. And they come out and they say to their public, they say, we enter short spot anticipating a dramatic reversal in prices as silver's devilish blow-off, framing it negatively because they're wickedly short. Blow off top comes to completion. And it goes on to say, TD Securities entered a short position in silver futures in early January, betting the price would fall towards $40 an ounce. They placed a stop loss around $92 an ounce to limit losses if the price went the other way. What do you think happened last Friday? At a great expense to TD Bank, they got stopped out. If you play short in a market where you used to be able to do that and drive down the price not only through shorting, but through rhetoric, it would work. And it wouldn't come back. Now, they knock it down, great. You got people that are standing for delivery for billions of dollars worth. Say, thank you so much, TD Bank. We'll take all of that and watch what happens to the price. And we're going to stand for delivery too. So you need to come up with that silver, not just a papered over payment instead of the real thing. It's an existential threat to these banks, and they proved it in a very, very short period of time, showing just what happens when physical demand overtake paper manipulation. And that's why I've always felt that the only way you can successfully manipulate a market over a period of time, the way the Western central banks did, is to push it in the direction it's going. And they held it down. No one wanted it. But all of a sudden, there are some very sophisticated people and very wealthy people and very well-informed people, whether it be the central banks or whoever the hell is doing it here, or whoever has been draining the LBMA, And they're like, okay, fine, we'll play that game, and we don't play on margin, so go ahead and short it and watch what happens. And maybe that's why the Economic Times just came out and said, well, you know what? The 5 banks in the U.S., they're actually net long. It's the banks in Europe and the banks in Canada that quite haven't got that memo yet, and this would prove true with TD Bank. There is a correlation there, but he came out and said Bear Stearns failed largely because they held the largest short position in silver. This is the head of the CFTC, the Commodity Future Trading Commission, the commodity police, just like the SEC for securities. And he admitted that largely the reason that Bear Stearns failed was because they bet against silver and the price collapsed, and they let them fail. There were reasons behind why they let them fail. They were one of the only banks that didn't play ball with the Fed on something else years before, but evidently that was never forgotten. And so when the price rose dramatically, they collapsed. And this is when you get into the Jamie Dimon thing and all of the stuff that Bart Chilton talked about. It's one of the 2 videos that anyone who owns metal should watch. But the admission from the head of the CFTC that this is indeed what happened, to me, is exactly what will happen. And if you get a failure to deliver, where the Fed doesn't come in and backstop, doesn't make Jamie Dimon and JP Morgan take that position, doesn't paper it over, you get a bank like for example, UBS, who realizes that the derivatives that they took over for Credit Suisse, same thing. Do you think they wanted to take them, or were they asked politely to take that? Those derivatives that they hold are worse than they thought. And you get a bank like that who has a failure to deliver, and the U.S. Federal Reserve doesn't come to the rescue, like the last time these things happened in 2008, and the United States had to open swap lines for the Swiss National Bank to bail out everybody. If they don't let that happen, and you see a systemic failure by one of these banks, a failure to deliver, well, these banks don't just trade in metals, they trade in everything. And you start to get a run on one of these banks, the systemic contagion reaction is like a house of cards that collapses. Could that happen? Yeah, absolutely. And I think that's the mistake that people make, to think that, well, they'll never let that happen. Who's they? And isn't it just possible that when you over leverage a system to the degree that the West has, where you rehypothecate or resell the same piece of metal over and over and over and over again, assuming no one will ever stand for delivery, but everyone does, and you can't get it, what happens? It's the kind of deal whereby they say when you go long, you can only lose what you put up. When you go short, you can lose everything. And it just keeps on going. And I think that is the lesson to be learned, that it could get very, very, very ugly. Now, is it probable to do that? Hope not.
The GDX up 3.83%, so a little bit under 4%. The GDXJ up about 5.5%. So the high was up about 6%. So we didn't make new highs into the close. I guess there's still some profit taking there, but these are new highs, new multi-year highs for these indexes. I mean, either it's a new record high. As far as the GDX, this is the highest it's ever been. So this is a record high for that index. But if you look at the GDXJ, it's still below its 2011 high by about 20%. So, gold is triple what it was back then, right? We're 1,900, not quite triple, but more than double, right? Because it's almost 5,000, and back then it was below 2,000. But those stocks are lower than they were back then. Now, that's not going to be for long. I think, certainly by February, in my mind, if not even before the end of January, we'll take out those highs. But then we're going much, much higher, because this is a whole new world that we're about to experience, right? We are going back to a world where the U.S. dollar is not the center. That's everything for today. I'm probably going to do a Schiff Gold market wrap on Friday, so make sure and look out for that, because we could have another huge day in the metals tomorrow. And again, another big weekend with a big gap up on Monday.
The silver market is witnessing a historic shift as major financial institutions, once able to suppress prices through paper derivatives, are now capitulating to physical demand. A prime example is TD Bank, which reportedly entered a short position targeting $40 silver, only to trigger a stop loss at $92, suffering massive losses. This event signals an existential threat to bullion banks. Unlike previous cycles, when rhetoric could drive prices down, the market is now dominated by wealthy entities that favor physical delivery. This forces banks to cover naked shorts in a rising market, creating a potential failure-to-deliver scenario reminiscent of the Bear Stearns collapse. Market signals confirm this historic shift, with the GDX mining index hitting fresh all-time highs, Yet immense opportunity remains in the junior sector. The GDXJ is still trading 20% below its 2011 peak, despite gold prices nearly tripling since then, suggesting the minor bull market is still in its infancy. Analysts warn that we are entering a new world where the US dollar is no longer the center of the financial universe. As this transition accelerates, the real crash will manifest as permanent destruction of purchasing power, leaving investors with no second chance to exit paper assets for real wealth. Share your thoughts on their analysis in the comments section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.